Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase, a podcast where we help you focus on market events that we believe truly matter. Overnight, US stocks closed higher by 0.8% as a combination of strong earnings and higher yields led to gains in financials and materials sector. In Asia, Chinese stocks are likely to be in focus today following the sharp intraday decline yesterday, which prompted intervention from state-backed funds to help stabilize the markets. From a macroeconomic perspective, inflation trajectory continues to be the biggest swing factor for markets, and hence today's US CPI data release will be closely watched. Now, consensus expectations are looking for a 7.3% year-on-year increase in inflation, which would be the highest increase in nearly 4 decades. If we dig further into inflation, one of the key drivers has been the sharp increase in commodity prices over the past 18 months. In fact, Bloomberg Commodity Index is at the highest level since 2014, and just this year we've seen WTI oil prices rise by almost 19%. Even in metals, we've seen iron ore prices rise by over 20%. Now, the good news here is that we've seen oil prices taking a breather, and WTI has declined modestly over the past couple of days to just below $90 per barrel. This is because markets are assigning an increasing probability of resumption of Iran nuclear talks, which may ultimately pave the way for resumption of oil exports from Iran, helping boost the global supply. That said, the persistent inflationary concerns have meant that bond yields across most markets, especially US, have continued to creep higher. But inflation and expectations of rate hikes in 2022 are not the only drivers which help explain the higher yields that we have seen in the past few sessions. If we look at high-frequency data, it seems to suggest that we have started seeing the seasonal selling from Japanese investors for repatriation of funds ahead of the end of financial year on 31st March. Given that Japanese insurance and pension funds are large buyers of US Treasuries, this could exert further pressure on US Treasury yields in the next few weeks. Now, just last night, 10-year US Treasury yields touched 1.96%, which is the highest level since 2019. And this is very close to the crucial resistance of 1.97%. If we do see a break above this resistance level, it can fuel yields to move higher than 2% level, which is a very important psychological threshold. Hence, today for investors, US CPI data and 10-year Treasury yields are likely to be the key focus. Now, if you enjoyed the podcast, please don't forget to rate and like it. Thank you for listening and wish you a very happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.